All right, what's going on, y'all? Welcome back to the Average Money Works podcast. If you're new to the podcast, this is what we do here is we offer investing and money saving tips to get ahead in life, get motivated, and get on the right track to success financially. If you want to get a visual to go along with what we are going to talk about on this podcast, make sure you head over to the Instagram page, follow at Average Money Works. That's where our daily posts are coming from, and that's basically what we do here is we talk about the post of the day on our Instagram page. So if you're watching this on YouTube, you can just follow along on the screen. If you're listening to this on the podcast form and you want a visual to go along with it, go ahead to the Instagram page. The topic for today is going to be the power of investing. So if you haven't listened to any of our previous podcasts yet, we go over financial goals, how much you should invest, why you should invest, personal finance checklist, writing down your expenses on paper, areas where you can cut back on expenses, how to figure out how much money exactly you should invest. And today we're going to talk about why you should invest. Another reason why you should invest, the power of investing in relation to other areas where you put your money. So going right off of the post, if you put your money in a savings account, your regular personal savings account, that APY is 0.06%. So APY is your annual percentage yield, which basically means how much interest you're going to get on your money in the course of a year. So 0.06%. And if you listen to that, it's less than 1%, but it's less than half a percent, and it's less than a quarter of 1%. So you're getting basically nothing for it, right? So I put it in this calculator here. If you want to do your own math, just Google APY interest calculator and you can pull up something like this on Axis Bank. And what we did was we put in an initial deposit. So let's say that we're putting in $1,000 of initial deposit, and then we're agreeing to put $100 in every single month. So after doing all of our finances, our expenses, figuring out how much money we have, how much money we can invest. Let's say that 10% of our income is $100. So we're putting in $100 every single month into our savings account, our personal savings account. And after the course of a year, you put in $2,200 because there's 12 months in a year. So 12 times 100 is 1,200 plus that initial 1,000. So in 1 year, you've invested $2,200 of your own money, and at the end of that year, you'll have $2,200.96. So just listen to that real quick. You're putting in $2,200 and all you're getting in return is 96 cents. So what they do is now you want to put your money into a high savings yield. So the way that high savings yields work is you either have to put in an initial deposit and agree to not touch that money for a certain period of time. So there's a time period where you can't touch that money. Usually it's between like 3 months to like 5 or 6 years. So the longer your term, the more chances of you getting a higher percentage. Right here, you can see the average savings is a measly 0.06% in your savings. If you do a high interest CD, like a high interest yield, you're looking at 0.6%, 0.8%. There's ones that are 0.85%, but it all depends on how much money you put down and how long you agree to keep that money there. But as you can see, it's still under 1%. So if we go back to our post and look at this, let's say we do the same initial $1,000 deposit and we agree to put $100 every single month for a year with our APY being at 0.7%. Our total invested is still $2,200 and our 1 year return is now $2,211.23. So our interest earned over the course of 1 year with a 0.7% interest is $11.22. So you go from 96 cents to $11.22. So that's very intriguing to get into or think about is how much more money you can make with the money that you're investing. So now we're going to take it a step further and why we're talking about the power of investing, because in the stock market, let's say you put that same initial $1,000 in right off the bat, and then you're doing your same $100 monthly deposit, and just looking at um actually let me pull this up on Google, the average rate of return in the stock market. All right, so the average annual rate of return in the stock market is about 10% per year. So that's been the average rate of return for nearly the last century, as it says here. So 10%, we're already past that 1%, which is what the high interest yield and the regular savings don't reach. So we're at 10%, and I went and did that in this calculator right here, and looking at the numbers, your total invested is still the same, $1,000. Monthly deposit is $100 per month. So your total investment is the same, 10%. Your 1 year return is now $2,367.02. So your interest earned is now $167.02. So in your personal savings account, it's 96 cents. In a high yield savings CD, it's $11.22. And in the stock market, it's $167.02. So that just goes to show the power of investing in the stock market. And if I want to take it a step further, let's look at what SPY did this past year, which was 17%. So over the past year, it was 17%. So let's go ahead and put that in here. So our initial deposit is still 1,000. Our APY is now going to be 17 for 12 months. And we're going to put in $100 every single day, or every single month, for a year. And now we're looking at $2,492.96. So if we take 2492.96 minus our initial investment of $2,200, we're making $292.96 just if you started this a year ago. So that's $292 more than just keeping it in your savings. So if you have extra money, you want your money to grow and make more money. This is $292 that you don't have. And then if you look a little bit further down on our Instagram post, I added the 5-year return. So if you did this 5 years ago, or if you start now and you try to game plan for the next 5 years, which isn't that long in the long run because we're already basically agreeing to work till we're 65. So at least the next 20 to 30 years that we're going to be working, you can start building this. And in our personal savings account, we go from making 96 cents in 1 year to 5 years, we're looking at $12.01. So at that point, we've invested $7,000 and we got $12 in return. If you look at the high yield savings, same amount of time, same investment of $7,000, and now our interest earned is $141.79. So we go from $12 to $141. But if you go to your 5-year return in the stock market, same amount of money invested, and your interest earned now is $2,431.89. So holding for 5 years, you go from $12 to $141 to $2,431 just from putting it in the stock market versus holding it in either a CD or a savings account. So if you still need a reason to get into the stock market and you're holding back, let this visual right here, let these numbers speak for themselves, and now start thinking about how you can get started investing in the stock market today and start setting yourself up. And what you do is you put an initial amount right now so that you're already in, and then you set it up where you're paying it monthly like we had mentioned in the past. Treat it like a bill, treat it like you pay your rent, treat it like you buy groceries, like you buy gas. You're not going to get anywhere without gas in your car. Treat this the same way. You're not going to get anywhere financially without investing your money. So with that being said, make sure you guys start investing. Follow us on Instagram and on YouTube, Average Money Works. See y'all mañana for the next one. Peace.